And like every Friday, we are here again with your business office support call. The reason for this call, first off, it's specifically geared towards our business office leaders in the senior living space. And we just get on this call, we do some training, talk through different things that we've seen, almost a decade serving the space and just working with so many different community presidents and business office directors. We've seen a lot of issues come across our desk and just want to share some of that. And so again, we're here another week. My name is Burdette Tatum. I am the founder and CEO of Tatum Accounting Services. And we like to believe that we bring accounting solutions that solve real problems. And again, one thing that we've seen specifically in the senior living space is you know, not a whole lot of support, I feel, for, and maybe support's not the right word, but not a whole lot of training resources, I feel, specifically geared towards the business office. And so, hey, we're here to do something about that. So if you remember last week, we dug in and talked about, um, we looked at some invoicing and specifically, um, looked at the task where our community business directors are receiving these invoices from various vendors and having to plug that into the accounting system. And we really just pulled up some real life examples and look to mimic what the systems look like and how they have to index those invoices and put it in whatever AP system your organization is using. Nowadays, many of them are similar, but it's a digital platform where you're able to pull over that invoice information and you shoot it through a digital workflow so it can be approved and so forth. So the invoice processing, the impact on the financials, always want to drive back to the financials is what we try to do on these calls, just to help build that understanding of each task you're doing, how it impacts either the balance sheet, the profit and loss statement, or the income statement, or both. And so this week we're going to do more on expenses, and we're going to look at that P&L, that profits and loss statement, and look at a expanded view. The last one we looked at was a kind of a small profit and loss statement because the point was just to look at that invoicing process. And so now we are going to jump back into, as you know, I always like to kind of do a recap of the previous week. And so we're going to jump back into the our Excel file, and we're going to look at the profit and loss statement. Sorry, machine is moving a little slow. All right, so last week this is kind of what we drilled in on, and we talked about the indexing process, right? So we have the invoice and we index it into the system. Again, whether that's Nexus, whether that's Yardi, whether that's MRI, whatever system that you're using, and the impact of that on the financials and how it's building the financials and what it looks like when we have a miscode, right? That is very common. And why we have built in, or most organizations should have been built in, a part of that process is when it's initiated, it's going through the different approvals, and the approvers, hopefully they're not just approving without looking at it, but looking at it to make sure it makes sense, not only just from the budgeting standpoint, but yes, is the invoice right? Or if there's an error somewhere, to help catch that before it goes into the system and ultimately out of the door. So there's good controls that we talked about last week that we want to make sure that's in place. And as the business office leader, I mean, you're championing a lot of these processes when you're initiating it and pushing it through, and stand on your leaders to make sure that they're clearing out their dashboards. We call it the digital dashboards, so they don't have a whole lot of invoices just sitting there, because that could be another reason why payments are not being done. Vendors are not being paid timely because in that AP system, in that accounting system, you have 4 or 5 invoices sitting on one of the leaders' dashboard. For whatever reason, they have not been able to approve it. Maybe they've been out of town, and again, we didn't use the system as we should, so we didn't delegate those invoices appropriately or have those invoices routed to somewhere else. All things that we want to make sure that we're doing to keep the invoices pushing through and keep the invoices going through to the financial statements in the P&L. So at the end of the month, there's less accruals, there's less holes, and you have a more accurate picture of where we stand. So that's a wonderful segue into this week's topic. Again, more on expenses, looking at a P&L as a whole, and one, how do I read a P&L, right? So there'll be a little bit of that in this conversation, because many of you are involved in that end of the month process when you are when the financials are, or draft financials are being sent to your presidents, executive directors, and they're having to answer certain questions, asking their own questions. And in many of those cases, you're being brought into that conversation because you are seeing all the invoices and they're coming through you, and there's little that's showing up on those expenses that you have not seen come through your desk, so you don't have an understanding on, which is why it's so important and to be plugged into a resource like this, so that because you have so much value to add into that process. And this is what we mean when we're trying to we want to make sure every business office win as we cover this content to make it more valuable. So that you can be more valuable to your leaders and win in your role. So let's go over to like I said, a bigger P&L and talk through certain things once our system catches up with us. So this is an income statement, profit and loss statement. You're going to hear those terms used interchangeably. And I'm going to make this a little bigger. And we've seen so many different parts of this. So when we talked about revenue way back when and talked about move-ins and incentives and all that, we focused on this section up here, the revenue section, right? And last week when we dug into the expenses and looked at the processing of invoices and all that, we are focused on the bottom section of the P&L, which is the expenses. And so we know on our profit and loss statement, we have revenue, and then we have expenses, and then at the bottom of the P&L, that's going to be our NOI, right? So we want to see if we are positive or negative, and so revenue minus expenses equals our net operating income. And so for the purpose of this call, one, as we're looking at these financials and understanding that each of these expenses, most of them are being pushed through that invoicing process we looked at last week as they're being approved and then pushed through to the system. Obviously, some of these are direct entries that maybe the accounting team is taking care of, or AP that's being handled at call it the corporate office or at the operator level. But it's so important to be able to understand how to read it, right? And so we're looking at what would be considered a 12-month P&L or monthly P&L, all rolling P&L. Now we're not looking at 12 months at a time. We're looking at January through October. But most of you all have seen a P&L like this, or I can tell you these P&Ls are being produced for your organizations because it's a great report to look at trends. And so we have all the months stacked up against each other from January to October, and we're able to see the revenue and the incentives and the expenses to see where things don't make sense, right? And so when your president is getting these, or when the accounting team is looking at this, I can tell you that they're looking for various trends when they look at this report. And when they see a hole, they're going to dig in and ask a question. When they see a negative, it's like, hey, well, why is that negative? And let's dig into the accounting system to see what happened. Maybe there was a accrual put in, which we'll cover in a moment. Maybe there was an accrual put in that reversed in this month. And maybe that's why it's negative. And so should we reaccrue? Or did that invoice really hit, but it hit somewhere else? So that's a classification issue, right? So last week we looked at that. When you classify something, when we classified incorrectly when we're approving the AP, then we get to the financials, and for whatever reason that was missed, then that's a potential error where we accrued it, but it was already in the financials. Now we have a duplicate. So next month it flips out and it's reversed, but we realize that it was a duplicate anyway. So in this case, that means September or that month would have been too much expense would have been put into that month, and so it corrects itself in October. So it's things like that, right? Digging into the financials and understanding the financials, to understand the coding of the invoice that can really help when it comes to making sure that we have accurate financials, because the best relationship is always the accounting team working with the business leader. That's how a great product is then developed and then hand off into the investors. Okay, so just kind of want to scroll through and this will be a slow topic and I want to cover for a few weeks, but just look through the financials. So this is what we'll call our accounts. So these are a chart of accounts. These are all expense accounts, obviously. And again, each line item would be invoices that most of these would be invoices that you've seen. So when we talked about having a list of recurring invoices and understand which invoices are recurring. So when you don't see it come through, you're able to reach out to the vendor, you're able to reach out to the accounting team to say, hey, look, I have not seen this invoice, so we probably want to accrue. And I keep saying the word accrue, and some of you may know what that means, and some may not. And so when we're talking about an accrual, let's look at example. That'll be the best way to display it. So in short, in a very dumbed down definition, is to put in this expense into the financials. That's basically what we're doing, right? Like, so we know there's a bill out there. For whatever reason, it didn't hit in the period, but we know we incurred service for that period, right? An overused example was a landscaping bill, right? We know we have landscaping each month. And so in the particular month, we're looking at the financials. We don't see a landscaping expense, but we know we didn't fire the landscaper, and we know they came and serviced the lawn. For whatever reason, we don't have the invoice. Okay. To have financials that are accurately represented, we want to put an accrual. So in absence of a bill, we want to put in expense in the financials to show that, hey, there was landscaping expense and there should be an expense showing here. So an accrual would be the accounting team would make a journal entry where they're going to hit that landscaping expense line item to be a placeholder, if you will, until that invoice comes in. Okay. So we don't pay bills from accruals, but it's just a general ledger entry to show that expense, and then it'll flip out, then actual bill will come in, and that's how we pay that vendor. So let's drill down into this line item right here. So this particular P&L happens to be broken down by department, if you will. So you got some resident services expenses, you got some dining expenses, and we got some physical plant expenses. So landscaping happens to fall under physical plant. The profit and loss statement can be broken down many different ways, right? Excuse me. So let's do this. A couple tricks we'll do. Let's freeze this pane so that we can see our dates carry down. So we're going to do view and freeze pane. And I want to freeze it both ways. So we'll bring that down. Now we have our months at the top so we can easily see. We're going to go back down to our physical plant section and going back to our landscaping example. So let's what does it look like when we didn't do the accrual, we didn't catch it, and we had to correct it within a couple of months financial. So in January, we see we have a 2,300 landscaping expense. February, there was nothing. Okay. And then we have it doubled in March, which by the time we get to March, that's correct in a sense of when you look at January, February, March, we have 3 invoices for the year, but unfortunately we missed February, so we had to double up in March. But by the time you get to March, you've got 3 invoices. So this is where you have a hole because we didn't make the accrual at the time. Let's just say the accountant didn't make the accrual. Wasn't sure if it was a recurring invoice, which landscaping it definitely should have been. So we would have to double up in March. So in February, the total expenses would have been low because we were missing that landscaping invoice. And then in March, it's high. And so when you put them two together, they work out. And so we got 2,300 all the way across. And so let's say we get to October and same thing. Luckily, the financials are not finalized yet. So we see a whole, hey, landscaping has not hit, right? We know that we want to make an accrual if we incurred that service. So that's communication between the business leader and the accountant. I know if I was your accountant, I would say, hey, did we have a landscaping bill? I'm pretty sure we had a landscaping bill, but I didn't see the invoice. Oh yeah, the invoice was late, or it's stuck on, maybe my my physical plant's dashboard or what have you. So we do need to make an accrual. So that's where I want to teach our business leaders. You can be proactive there and say, hey, look, here's a list of accruals, and there's that landscaping bill, because I know I haven't seen that bill yet, but I remember seeing the landscape where I know we've incurred that service. So we would make an accrual into the financials as a journal entry so that we can accurately reflect the fact that that 2,300 needs to be there so that we can catch it in a month. So we don't have an example like this where we missed it in a month. So those financial statements are produced. And then next month, March comes and we're producing, we say, oh man, we had, why is landscaping 4,600? Oh, well, that was a late bill that came in that we missed it from February. And the question always going to be, hey, well, why didn't we accrue? At least on the accounting side, we get that question all the time. And so we want to make sure that communication is there so that those accruals are being put in the system. And again, I can't stress enough how the business office leader is a wonderful partner in that process, because they're seeing the invoicing and they can speak into the financials. And ultimately, when we have business office leaders speaking into the financials, it's a much better product. So in the case of the landscaping bill, we would make an accrual so that we have it in the financials. So whether you can speak the definition of the accrual like an accountant in the simplest sense, that it's a plug into the financials, a placeholder, if you will, for the invoice until the invoice comes in. Because again, we don't pay through a journal entry, right? We can't pay a vendor through an accrual, but it is a placeholder so the financials are correct until the invoice comes in. So just wanted to bring that to life. And so now we can see 2,300 landscaping bill is pretty flat for the most part, unless they did some extra, maybe install of some pine straw, some other stuff. For the most part, we know what that expense is. We can count for it, and we know when we need to make accruals. Again, and just looking through more of the financials and getting used to some of these account names, and based on your property, you're going to have similar account names, different ones. It's broken down differently, but all in all, the P&Ls, most P&Ls are going to look the same, and they're easy to read. Another trick to do. So you notice we got some zeros and things like that. Another trick that I like to do, and it's just kind of an easy formatting, but it's a lot easier to read. Let me just go all the way down here. I'm going to make this a number format, accounting number format. So I just format the whole section just as accounting number format. So I just clicked on this comma, and it just puts a dash where all the zeros were. I think my connection is bad. It puts a dash where all the zeros are, and it's just a lot easier to see on the eye. So now you really can see when a number's there versus a zero there. And now it just kind of goes all the way through. And so just if you are looking at the financials, and if you are kind of analyzing it, that's just a quick trick to move the zeros out of the way, essentially. And now you can see the numbers, and you can see a lot easier when there's gaps. So for whatever that's worth. So if we scroll on down and scrolling down through the financials, and again, broken up by department, so we get to see how each department is doing. So that's maybe good for budgeting or things like that. Each of our leaders are going to have their own, in many of the communities, each of the leaders may have their own budget. And so they're able to compare their actuals to their budget. And again, as the business office leader, you're quite involved in that process, and really able to help lead that charge. So we get all the way down. In any P&L, there's going to be expenses that we would say, quote unquote, are non-controllable, right? So from the operations team, it's really nothing they can do to increase or decrease those expenses. Those expenses are where they are. So property taxes are one, right? No matter how great you run your building, the property tax is going to be what they are. And so that expense is going to come directly from your accounting team, and they're going to make an accrual, right? Again, absent of an invoice, but we're taking maybe what hit last year or marking it up a little bit, a couple percent, and then we are making an accrual each month. And then when the bill comes in, if it's higher or lower, your accounting team is going to make an adjustment year to date to equal the expense for that year, and that's how that works. So these would just be normal accruals each month, again, non-controllable. Property insurance is what it is in many cases. So either if it's paid up front, and then we just are showing the expense each month, or it's an accrual, then it's paid. So those are when you see, and I'm talking through them. So when you see them, you understand, right? I challenge you to go look at your P&L and look at the expenses and see, get an understanding of where it comes from, right? It just makes the P&L just coming alive a lot more for you, and assisting your presidents, you looking at that and understanding that, because you're going to have a conversation about it, and understand what it is. And once we got total net income, which is just our revenue less all our expenses, or operating expenses, right? Expenses that we have to incur to operate, gets us our NOI, or net operating income, as we see. And we can see the net operating income here, which this community is in start and kind of lease up mode. There's a negative NOI, and then you get other income or other expenses. And in this case, the other expenses we have is depreciation. We won't dig into depreciation, a term you've heard before. But once you deduct depreciation, then you get to total net income. And so depreciation is a related account to your capital expenditures, your CapEx, right? So we know we have fixed assets. Well, guess what? We've got to depreciate those fixed assets. In other words, we got to show a cost for those fixed assets on the P&L, and depreciation is showing a cost each month until those fixed assets don't bring any more value, if you will. But we won't dig too much into that. So again, profit and loss statement, and revenue and expenses. Why we make accruals, right? Accruals, we're making accruals so that we can maintain the integrity of the financials, because there are expenses that we've incurred, and for whatever reason, we don't have the bill. And if we don't have the bill, we don't have the expense. Well, to make up for that, we make an accrual into the financials, so the financials have that. And business leader, you're a great team member when it comes to making those accruals. I know when I used to work with a lot of our business leaders, we would work on them each month, sending up a list of accruals based on the invoices that hadn't come in yet, based on the invoice that we might not be aware of. They've got a spreadsheet where they'll set up the accruals for the month, right? And then the accounting team would add to that when they go and look at the financials, again, working together to have that to produce a better product. And that tends to work well. Draft financials go out, and then the final financials go out, and that tends to work well, because you have a business leader who knows what they're looking for, can speak into that. So that's why it's so very important for you to be able to read the P&L. I think that's why it's great to plug into a resource like this, because we'll drill down and we'll talk through all those components, all the things that I've seen, again, almost a decade specifically serving senior living, but just widely in accounting. And we'll talk to those things to help you get a better understanding. So when it comes to the financials, you have a great understanding of your company's books. And I mean, that's why it's called the business office, right? Like, you understand that business and understand the financial statements that are produced from your community. And that's our passion. That's what we're trying to do. So there's a lot that we can dig into, and I wanted to really give an overview first, and use this P&L as an example to talk through and explain accruals. There's a lot of other things that happen to populate this. But in a most, in the fundamental sense, from last week to coding the invoices, that's how the profit and loss statement it gets produced. There are other areas where journal entries are made, maybe payroll. So I didn't have any payroll accounts here. So you got payroll that comes through that gets populated, but you guys even see that. Many times you're seeing the payroll report, you're reviewing it, you're giving the approval, or the executive director is giving the approval, then it's being paid. That's going through the P&L. So there's not much that hits the P&L that you're not involved in. So it really makes sense for you to understand, once it's all together, how to read it, understand why the steps and the controls is in place leading up to the P&L, so that we can protect the integrity and make sure that expenses and revenue are being reflected appropriately for your community, so that the decision makers can react quickly. And that's the reason for it. So with that being said, we'll stop it there. We'll put a comma there, and next week we'll look to just dig more into it, talk through these accounts, and just try to really continue to build on that understanding of a set of financials for our communities. So awesome. I hope that was helpful. Did a lot of talking there. Go back and rewatch it. But again, let this be the takeaway. One, look at your financials, right? Run a set of financials, look at your P&L, and look at the account names, the chart of accounts, and see if some of this comes up in what we talked about on the call. Go find landscaping and look and see the flow and the trend of the landscape. And again, that's a 12-month statement is what it would be called. It could be called a rolling statement. It's a profit and loss statement, but you want to see the different months and go back and look and just see where you can see holes. And then see where you can match that with some missing invoices. Look at this month or this past month. But just get involved and really challenge yourself to understand your set of financials, because if you didn't know before, now after attending this call, you speak volumes into that process because you see so much of that it just makes sense for you to understand. Once it's all together on a profit and loss statement, it just makes sense for you to understand it because you're so involved in that process. Once again, Burdette Tatum here, founder CEO of Tatum Accounting Services. Really appreciate these calls. Hope you do as well. We want to provide a resource for you and passionate about making every business office win. Thanks so much.